Well, welcome to another beautiful day. My name is Bruce Bradbury. Thank you for joining again to my channel for this ongoing video series, Learn How to Day Trade with Me, where each episode we take a look at a different stock trading indicator that's going to better prepare us that we can add into our toolkit for when we go to day trade to help make our strategies all that much stronger. And if you're new to the channel, hello, my name is Bruce. I've been day trading for about 6 months. The reason I'm doing this isn't here's how you day trade, follow this stock kind of channel. This is a let's learn how to day trade together type of channel, right? Where I know a little bit from what I've learned before I started the channel, but I'm also still learning. So I want to, continue learning and making videos and engaging with you all out there about what I'm learning. So it's going to be really fun. And excuse me, I talked a little too fast, so I'm a little bit out of breath. Well, let's start off today's video with a little tradition that I want to start here, where we're going to take a shot of espresso at the beginning of each episode, because we're filming these in the mornings. And hey, what gets your day started better than a shot of espresso? So okay, hopefully I didn't make too, it's a little bitter. But anyway, we're amped now. We have espresso in us. And hey, I got comments in the last few videos that 26 minutes for a little video like this feels a little too long. Anyway, not that I care to tailor my content or anything, based on one comment, but I do want to try making it a little bit shorter today. So try keeping it under 10 minutes or something like that. So without further ado, let us go to camera 3, switch on, and let's get going. This is the infamous article that we've been looking at over the past few episodes here. So 10 best indicators for day trading 2023. We looked at volume weighted average price. Last episode, we looked at relative strength index. And now today, we're going to be looking at simple moving average. As its name suggests, the SMA calculates the average of the closing prices of a particular instrument. The indicator is updated constantly, and the average price is taken over a specific time frame. The goal of the SMA is to smooth out pricing data by extracting the noise. Oh, interesting. Sorry about that, folks. I had to cough. Anyway, the simple moving average is the go-to indicator every beginner should learn in the first place. When applied on a chart, it is straightforward and easy to use. So SMA is actually overlaid over the charts. Unlike yesterday, we looked at the RSI, which is a separate graph, and then the VWAP is also overlaid over the chart. So the SMA, the simple moving average, is very simple, right? The goal of the SMA is to smooth out pricing data by extracting the noise. So we can see there was a gap up, which meant, okay, like market was probably, okay, yeah, this is day. So, okay, market was closed, market closed, and then it reopened, and it gapped up. So the reason that you see, a little gap up in prices from like the close of the market to the next day of the market is really because, the world economy continues going after the U.S. market closes. After the U.S. market closes, the markets in Europe and the markets in Asia, these markets continue. So when we go on to that next day, we're going to see a little change in price because things kept moving and the U.S. charts just didn't grasp that. So that's going to be, that's going to be basically why that it looks like that. So let's move back on to the simple moving average. It's the go-to indicator, and it looks easy to use because it's just this line over here. If it's trending in upwards direction, so is the price of an instrument, and vice versa. The most important thing to learn about the SMA is that it is a lagging, meaning trend following indicator based on past price movement data. So for example, if you see the term 50-day SMA or 200-day SMA, you should know that they are based on the price action for the last 50 or 200 days respectively. The SMA is highly customizable, and you can construct it over short and long trading periods. Bear in mind that the shorter the time frame is, the more sensitive the SMA becomes to price changes. Traders use SMA also as support and resistance levels when applied on longer time frames. So, all that to say, what I'm gleaning from this information is that the SMA being a lagging indicator means that it's taking in data from the past. So we're not going to be using the SMA to tell us, oh, it tells us the price is going to be here. No, not exactly what it's telling us. It's just saying that, okay, based on this line, this is kind of where the price should be. So for instance, if you see the price way the heck up here when the SMA is right here, then maybe it might have to correct. Or the SMA might have to slowly creep up to meet the stock price in order for it to kind of hit parity here, where the stock price and the SMA are overlaid, which should be the case if price movement is super steady over the long term. So if it deviates from that, then maybe the thing that's going, oh, I'm sorry, I didn't have my camera on. Maybe the thing that is going to happen here is that it's going to revert, to that line in the long run. So we're going to go over to our trusty trading terminal over here. Turn that on. Sorry for the technical difficulties. Still learning the whole system over here. And my favorite thing, NASDAQ. And it's also April Fool's that we're trading on today. So see the April Fool's. I thought April 1st would be fun, or not April Fool's. 3/31 because April 1st was a Saturday, I believe. So let's just go. Let's go QQQ, and let's go back to our studies over here. Let's take the RSI out, remove that. Let's put in the SMA. So we have the moving average. Where do we have it? Okay, it should be this, moving average. But there's also an exponential moving average, so I just wanted to make sure that we're looking at the right thing here. So let's just do moving average 20. I believe that it should, okay, yeah, period, okay. So if we're on moving average 20, so let's change it, because I think it's 20 period. I think it should change. It doesn't mean that it's 20 like minutes or something, or 20 day. I think that it should be, 20 period. So what that means is that, we have different periods here. We can go 1 minute, 5 minute, 10 minute, 60 minute, 1 day, where every candlestick that we're looking at is that period. So if we go 20 SMA, then, or 20 MA on here, it doesn't even have the symbol. It just means every period of time. So for instance, here we've picked 1 minute. So for every period of time, we have, I've lost my train of thought, but essentially, that's what it means. Okay, so it's not like 20-day moving average, it's 20 periods of time, whatever I've selected on the graph. And what I'm just doing is I'm moving, and you can see that the moving average actually changes, which is cool. So without further ado, let's start on the market. And again, we're trading with QQQ, and our max, fake portfolio amount is like 30,000 or whatever. So that's going to tell us that 100 shares is our max. So we're going to start by buying in increments of 10. So we've got the moving average here, and it's a bit hard to see. So can I make this a little darker here? Yeah, I can. Line width. Okay, so let's make it like really, really dark. So it just crossed the moving average. So, quick thing here, I'm going to buy a few shares. I think it's going to go down. So I'm shorting the market right now. I'm going to sell it when it hits the moving average again. So when it hits the moving average, if it continues to go up after this, I'm going to buy more. Remember, I only have 20 shares in here, so it's not like I bet the whole farm on this position here. Okay, so I bought more. I bought 20 more. And now it's going back down to the moving average here. It's consolidating a little bit. I'm seeing it. And we're just trading them, you know, we're trading it. Okay, so it's 10 times speed. So that's why it's going too fast. So let's slow it down a little bit. We're looking at 2x speed. So we're consolidating up a little bit. Here's my strategy that I'm thinking. I think that it's a little, okay, so it's overbought considering, you know, where the moving average is. So we'll buy 20 more. Let's go into 10x more and see what happens here. All right, let's do our full position here, 100. And maybe not the best strategy of buying up here because this is a point of consolidation. I'm really hoping that it comes back down to the moving average. We're in a little bit of a risky situation right now because, and let me just slow it down. We're in a little bit of a risky situation right now because it does appear to be consolidating at this level, which is bad news for us because we've really, the price, oh, it's still going. I thought I paused it because, you know, we've got like, we've got the whole farm. Okay, if we had $30,000, we've just put it all in the market, which means that we don't have any power anymore to change our minds. You know, either it goes our way or we have to cut losses and we take a loss. So with that said, let me just boost it up a little bit more. And I mean, like, again, like always, I'm not like, I don't know what, I'll tell you guys out there if I know like what direction the market's going to go in. Oh, okay. So that is really bad news for us. You know, I just realized something. I thought I was shorting the stock, but apparently I was putting in buy orders. So, I thought I was shorting the stock. No, I wasn't. I was putting in buy orders. Okay. Well, this is good that that we're not playing with real money because obviously I got pretty confused there. So, you know, we're actually in the green because I thought we were shorting and we were actually, it went dead the other way of where we thought it was going to go. And it's actually going up. So, and see the moving average is spinning it up. So let's just cash out here, sell all of our stuff. We've got no position left. So let's do one more. Let's go one more. Let's go March 1st, whatever. I don't remember what happened March 1st. We're going to brush it 10x. We're going to do one more. I messed up. If you're watching the video, you're like, what the hell is this guy doing? You know, I don't know. But anyway, I'm not going to like re-record or anything because this is authentic. This is me. I'm learning. No re-records here. But we're trying to keep the video short. So we've got about 2 more minutes and I'm watching the clock. Let's go. Here's the moving average. Here's the stock. Let's see what direction it goes. We're at 10x. All right, immediately going down. We can't tell too much of what's going to happen right now. Or actually, let me replay this. Let's go back to market open. Let me 1x it. I know we've been trying to play the long game, but let me play a little bit of the short game here. Let's try to play it a little tighter around this. So we're at the moving average. We've gone down. Let's do it in shares of 50 now. And buy right there. Okay, and then I'm going to sell it when it hits the moving average. There we go. Rush our P&L. Okay. Buy. Okay. Basically, I'm going to restart here. So when it goes to the bottom of the candle, if it doesn't like re-candle, I'm basically gonna you know, it's going up. Okay, so then when it hits this moving average, I'm gonna sell again. If it goes the other way, I'm gonna sell. I'm gonna Okay, sell. All right, let's just put 100 shares in and, oh, I didn't mean to sell 100 shares. I rebought anyway. I messed up all my profits here. Let's 10x it. So it's deviated quite a bit from the SMA. So I bought 100 shares right there. And, oh, wow, look at that. Okay, ooh, okay. Should have sold up there. Should have sold. Oh, it came back. It came right back. So I'll sell right when it hits the top of the candle. And no, it's not going to do it for us. It's not going to do it for us. So we're pretty far on the away from the SMA right now. So let me buy 100 more. Speed round. Speed round. Let me buy 100 more. See where it goes for us. Dang. Every video I do, every video I've done here on the channel is like, okay, I'm going to try to trade off the indicator. And then I'm like, all right, the indicator's telling us that I think we should buy now. And then I buy, and then it goes the exact other way. It goes the exact other way. Anyway. Well, that concludes, hey, look, it made a kind of a V-shaped recovery. We've actually realized, well, we've realized $100.50 loss. So let's close it out when it hits that again. Okay, there we go. Oh, okay, we need to do it twice. Okay, so we realized a profit of $37.50. So that's how that goes. Anyway, folks, thank you so much for watching. I know today's video was 16 minutes, 17 minutes, whatever. I'm not watching the clock too closely, but I hope you guys had an enjoyable video today where we look at the moving average. We kind of saw how it reacted, and we tried to play it off of it twice, both 2 times. We missed the mark pretty much, and we didn't really make much profit, but it's good to know in the future. So maybe in the future videos, we'll layer on top, or we'll, we'll continue to go down the list of the 10 best indicators. So we're on number, we're on number 3 right now. So I think in next video, we're going to be looking at the exponential moving average, which should be pretty exciting. So stay tuned. Thank you everyone for watching. My name, as always, is Bruce. It doesn't change. Thank you for watching. Hit that like button, subscribe, and let me know in the comments below what you think. Okay, thank you everyone so much. I really appreciate you. Have a good night.